Hello and welcome to Livewire Markets. I'm Ali Selby, and there's been a lot of media frenzy recently around Perpetual's north of $2 billion deal with private equity firm KKR. Amid that whirlwind, an unlikely opponent has emerged in Sublime Funds Management's Rodney Forrest. Today, we're going to be learning why Rodney believes this deal is a complete disservice to Perpetual shareholders. Thank you so much for joining us today, Rodney. It's a pleasure to have you here at Livewire.
It's a true honour, thank you.
The deal will see Perpetual hand over its wealth management, corporate trust businesses, as well as its brand. Why do you think the deal doesn't pass the pub test?
You know, the first point really on that is there's a lot of disengagement and there's a lot of disappointment. And, you know, I've had people reach out to me, hundreds of people, that, you know, I've had competitors to Perpetual reach out to me. I've had family members from the 1910s and 1950s reach out to me. I've had people who are customers of the products communicate with me. That there's a travesty here that a brand that has lasted 140 years is about to be given away after 7 years with no value ascribed to that. And so there's a conversation at the board level around why has that happened and what has been ascribed to the brand, because we're in the dark. And so the disappointment across multiple segments of the community is very, very high. I'd also say that, you know, the second point is we're working in an area where we have insufficient facts. We actually we have a board putting a scheme forward without giving us separation costs, tax, costs around what the stranded cost allocation will be. And so how do you make a decision as a board with incomplete information? Shows to us, particularly me, that this decision's been rushed to meet a deadline. And so that puts into question mark the process within a board of the governance to say, what are we doing here to make an information? And I read in a local media article that they had 15 bankers. Now, you know, Warren Buffett's very critical of firms that engage bankers. And, you know, if you don't know within yourself your own DNA and take it from someone else, then you're questioning your integrity and the way that you're actually framing your own thinking. And the last one for me is really pertinent, and this is to the brand value of Perpetual itself. I mean, you know, you have here a brand that has existed with a product for 68 years effectively, okay? It's beaten the index for over 50. And there's more Hall of Famers in Perpetual than any other institution. And so when you look at what this value of the brand is, it's quite easy to dissect it from a post-it note, really. You don't need a complicated spreadsheet. You map together the multiple documents that the company publicly releases. And you can see that Australian Equities is delivering 100 million of pre-tax profits. Okay? Now, you put that on a 10 multiple, that's $1 billion. It is worth 80% of the spin-off valuation. 80%. And there's no communication around that brand and why it's given away, but it is 80% of the profit pool. You hear these comments that it's only 10% of FUM. I mean, anyone can buy necessarily FUM. No one can buy a profit pool. And so the desegregation comment hasn't been broken out to us as shareholders. And then a really important other point is it tells you there's a power in the brand because 80%, or actually to be precise, 78.5% of the FUM in the Australian Equities is retail and actual through intermediaries who are the wealth advisors. That tells you the brand has longevity and resonates. You know, this is just like Darwinism. It's evolution. The 80-20 Pareto rule is applying here. You know, all good businesses, 80% of their sales come from 20% of the SKUs. In this case, 80% of the profit is happening in the Australian Equities division in the spin-off. And so I bring those 3 points together that I think there's disillusionment, disengagement and disappointment. There's a lack of facts, and the profit pool is in the Australian Equities division, and we're losing that after 7 years. I do not understand why.
As you mentioned, there's been quite a lot of negative talk on the street. Brokers are also really split on the deal. Yes. How did we get here in the first place?
I think this case study will be taught in universities to come of what has happened here. And there's multiple reasons I think about here. And the first is probably process. I mean, Perpetual, when I grew up in my teens, there's dollar and dime. There is a Perpetual, the industrial fund, which has existed, as we talked about, since over 50 years. There's a framework in Perpetual of 4 filters. The board abandoned the own principles that the investment managers apply to select stocks. So there's a failure at the board level in my mind on actually applying the process that's in the DNA of the organisation. So that's the first one. The second point, I think, is a growth at all costs mentality. And that captures a lot of firms. And so the firm, under the current CEO and chairman, took FUM up 10 times. But what happened to profit? It's down 53% since all this has come together. And so buying growth doesn't necessarily make you more profitable. They also took gearing up 9 times. And then the big killer is dilution. If you look at time series of shares on issue, as investors, we look at, is it run for insiders or outsiders? And then we'll get to some other points later, but the shares on issue for 54 years barely changed. You had small incremental changes for team, but then the new chairman and CEO come in, the share count goes up 300%. So $1 today, if I'm a shareholder for mums and dads, is worth 33 cents. And so that growth at mentality, as you work through businesses, the successful businesses you study, don't risk it all. They will be methodological, be patient. And so that's the second point. Another point is skin in the game. The board collectively, there's 10 on the board, the CEO, so there's 9. They own 1.5 million of stock. That's very low. And the great businesses have alignment. As investors, we all like to see alignment of stock, okay? That's the third point. A fourth I'd put is, incentives. And this is quite interesting that Charlie Munger, a late investor I followed for a long time, unfortunately passed away. He says, "Show me the incentive and I'll show you the outcome." And when you look at the board, you study the history. Before the previous chair and CEO, in 2016, the incentive framework was statutory NPAT. That's what a company banks, okay? New chairman, CEO come in, we move to underlying earnings. Now, anyone can pick up the annual report and look at what the gap between annual and statutory is. There's a gap of 63%. They're getting incentivised, the execco, on a line that is not being remunerated back to the shareholders. And so I think, as Warren Buffett neatly says on incentives, anyone using underlying is either conning themselves or trying to con you.
You're throwing your hat in the ring to become a board member of Perpetual. Given that you haven't done anything like that before,
No.
What qualifications do you believe you possess to be able to, get that role?
There are a lot of directors today that arguably shouldn't be directors. I know some successful global short funds that have databases that follow directors, and where they move, because they've had poor capital allocation, that stock becomes a short. And so, I believe, I have the qualifications on paper from the Australian Institute of Company Directors. I have, multiple degrees, but that's only through paper form, not through livable experience. And I've been really honoured to work, alongside multiple world-renowned investment managers, and being highly respected and still well regarded today by those individuals. And I'm proud of that. And I'm proud that I'll be able to bring a different diversity of thought to the board and be able to challenge processes, because a lot of these boards work in groupthink, the mania of crowds. And if I'm successful and selected on the board of Perpetual, I'll be bringing a focus to customer and a focus to actually the people to get better outcomes for all shareholders.
In an ideal world,
Yes.
what changes would you want to see at Perpetual if you did get a board
Yes.
seat? And can Perpetual's business continue to grow, or is it more about just making it as profitable as possible?
If I maybe start with the second question, profit, there's this, and if you study US companies, it's, all about profit. And, profit is an output, not an input. You actually have to focus on the processes to get to profit. And, you know, we all read a lot of biographies, but decisions today are realised typically 2-3 years out at a board level. And if you have a mindset of profit first, you actually will not get the right outcomes for your customers, and you are short term. You study all the great businesses, they have endurance, and they have a mentality to think with patience. And so, you know, I would not be striving for profit first mentality. What I can strive for is full transparency. Full transparency and full integrity, that I would be transparent, unlike what I believe the board has done here to get us to this position, and say these are the facts, and have the rigour of the discussion in the boardroom to make sure that there's enough diligence gone into these decisions that benefit all stakeholders. I don't think it's right for me to dictate today what changes I'd make, only because a board is a collective ecosystem of people, and there's diversity of group. And for me, you know, I've been fortunate to be in winning teams, and you want to be part of a team and debate those concepts. And for me, I'd say I would be actively engaged with the other board members to not try and repeat the mistakes that have been made. And, you know, as fund managers, we make mistakes regularly. And I think the board needs to put their hand up and say, we made a mistake. It's not too late to lose the brand of Perpetual in Australian equities. That is the key focus of what I am about here. It is about ensuring the product. My father, 31 years ago, got me into investing by investing in the Perpetual Industrial Share Fund. And to lose something that, you know, you walk down the pub to your early question, everyone knows Perpetual, everyone. You know, no disrespect to the other brands, but you got a mum and dad who are calling me, right? How can this happen? So, you know, if I am successful on the board, I would want to have all remit on all these people that are so emotionally disengaged with what has occurred, that we go back to our DNA of what made us successful. And so that's why, for me, I'd take that approach.
Well, thank you so much for your time today, Rodney. It was awesome to have you here at Livewire.
Yes, it's been a pleasure. Thank you.
If you enjoyed that too, don't forget to subscribe to Livewire's YouTube channel. We're adding so much great content just like this every single week.